Welcome to the Explainer. So, in 2025, the United States did something that honestly no one saw coming. It completely flipped the script on its stance on Bitcoin. Today, we're going to break down how that single decision kicked off a massive global race, a race for the future of digital assets. All right, so here's what we're going to cover. First, we'll look at that huge policy U-turn in the US. Then we'll decode the new laws that came with it. After that, we're zooming out to see how the rest of the world is reacting. We'll even explore two possible futures this could all lead to, and we'll wrap up with what all this actually means for you. All right, Section 1, America's Crypto Turning Point. We're talking about a historic shift from, well, basically ambiguity to a full-on strategic embrace. You see, in early 2025, the U.S. government, which had been pretty skeptical about Bitcoin for years, made an announcement that just sent shockwaves through the financial world. It was a complete 180, and believe me, it changed everything. And then, bam, the bombshell dropped. On March 6, 2025, President Trump announced something huge, the creation of a strategic Bitcoin reserve. Investor David Sachs summed it up perfectly when he called it a digital Fort Knox. And you know what? He wasn't wrong. This one move totally changed how the U.S. government looked at Bitcoin. So you gotta ask, why the sudden change of heart? Well, it turns out the U.S. government learned a very, very expensive lesson. A White House fact sheet dropped a jaw-dropping number. By selling off its seized Bitcoin way too early, the U.S. missed out on over $17 billion in potential gains. Ouch. That is a mistake you definitely don't make twice. And get this, here's the real kicker. This massive reserve, it was created without costing taxpayers a single cent, not one. It's all funded by Bitcoin seized from criminal cases. So just like that, in an instant, the U.S. became the world's largest state holder of Bitcoin. They basically put it on the same strategic level as their gold and oil reserves. It's a huge deal. Okay, on to Section 2, Decoding the New Rulebook. Because look, having a strategic reserve is one thing, right? But to really truly embrace crypto, the U.S. needed clear rules, a real playbook. And that's where two landmark laws came in, designed to finally end years of what was basically regulatory chaos. So first up is something called the Genius Act. Now, this law focuses on a super important part of the crypto world, stablecoins. If you're not familiar, these are just digital currencies that are supposed to hold a stable value, pegged to something like the US dollar. And man, did they explode in popularity. By 2024, their transaction volumes were bigger than Visa and MasterCard combined. But here's the problem. They were operating in this kind of regulatory Wild West. Something had to change. So the Genius Act came in and brought some much-needed stability and, importantly, consumer protection. It laid down a really simple but super powerful rule. For every single digital dollar out there, the issuer has to hold a real dollar or a super secure asset in reserve. One-to-one backing. This was a direct answer to those catastrophic collapses we saw, like with Terra/Luna. And it's designed to make sure a disaster like that never, ever happens again. Now, the second piece of this puzzle is the Clarity Act. And this one tackles a long-running problem. For years, you had two of America's biggest financial regulators, the SEC and the CFTC, basically locked in this nasty turf war over who gets to police the crypto world. And you can imagine it was just a recipe for confusion and gridlock. The Clarity Act finally came in and just drew a clear line in the sand. It's actually pretty simple. The SEC, they handle investments, right? They get to oversee new crypto projects that are raising money. Think ICOs. Then you have the CFTC, they're the commodities folks, and they get to regulate the established digital assets like Bitcoin and Ethereum that are trading on the open market. This simple split was a total game changer. It gave the industry the clarity it had been desperate for. All right, moving on to Section 3, the global crypto race and how the world is responding. Because as the U.S. finally got its act together, the rest of the world couldn't just sit back and watch. They had to react. And that American policy shift, it kicked off this huge global scramble, with countries taking completely different paths. So if you look at the big picture, the world has basically split into three different camps. First, you've got the regulators, like the U.S. and the EU. They're trying to build a clear, structured rulebook for crypto. Then you have the banners, like China, who've just straight up outlawed it. And finally, you have the hubs, places like the UAE and Hong Kong, that are rolling out the red carpet, trying to become the next global crypto capital. But, the most fascinating, kind of mind-bending example of this whole global divide is happening within China itself. On the one hand,
mainland China has totally banned private crypto ownership. They want their citizens using the state-controlled digital currency, and that's it. But, on the other hand, the Chinese government is quietly holding one of the biggest Bitcoin reserves on the planet. And then just a stone's throw away, you've got Hong Kong, which is doing the complete opposite, setting itself up as a global crypto hub right under Beijing's nose. It's a wild contradiction.
Okay, Section 4. Two competing futures. So, where does all this lead? This global tug-of-war has basically created two very different, but totally plausible visions for what happens next with crypto. And trust me, the path we end up on is going to have huge implications for finance as we know it. Let's start with the bull case, a future where crypto becomes mainstream and mature. In this version of the future, all this new regulatory clarity in the US and Europe basically opens the floodgates for institutional money. We're talking the big players, pension funds, major banks, Fortune 500 companies, all finally feeling safe enough to jump in and pour capital into the market. This would take Bitcoin from a kind of niche, speculative asset and turn it into a totally legitimate, recognized part of the global financial system. And hey, this isn't just some wild fantasy or wishful thinking. You've got respected analyst firms like Bernstein putting out forecasts that this new wave of legitimacy, this flood of institutional money, could push the price of Bitcoin all the way up to $200,000 in 2025 alone. Just think about that. But, okay, on the flip side, you have the bear case, a future filled with conflicts and chaos. This much more critical view says, hold on a second. It argues that this whole new system is built on a really shaky foundation, and it's full of serious problems. Things like conflicts of interest, unstoppable volatility, and a chaotic, uncoordinated global approach. For the critics, one of the biggest red flags is the potential for major conflicts of interest. For example, it was reported that President Trump himself earned around $57 million from token sales in 2024. Now, that raises some pretty serious questions about who these policies are really designed to benefit, the public or the politicians making the rules. You add that to Bitcoin's infamous volatility and this messy, fragmented global map, and some people think you have a recipe for disaster.
All right, final section. What does all this mean for you? In this new, kind of chaotic but exciting world, what are the key things you should be watching? Let's break down the key takeaways. So, here's what to keep on your radar. First, you absolutely have to watch the Clarity Act's journey through the Senate. If that passes, it's the final piece of the puzzle for U.S. regulation. Second, keep an eye on Japan. They're talking about a massive tax cut on crypto, from a crazy 55% all the way down to 20%. If that happens, it could totally unleash a new wave of crypto innovation there. And last but not least, just follow the money. The flow of institutional cash into the space is really the ultimate test of whether crypto has truly gone mainstream.
And look, at the end of the day, you have to remember the fundamental trade-off here, the risks versus the rewards. Yes, the potential for high returns is absolutely there, but the risks are just as real. That extreme volatility, those wild price swings, they are not going away. And here's something else to think about. As crypto gets more mainstream, it's actually starting to move more in line with the stock market. That can mean it's not quite the diversification tool it once was.
And all of this leaves us with what a final really big question to chew on. As all these nations and big institutions start to embrace crypto, can its original promise, that idea of a decentralized financial system, actually survive? Are we just watching the crypto revolution become another part of the very system it was supposed to challenge? It makes you wonder, right?
Well, one thing's for sure. The future of crypto is being written right now, as we speak. We really hope this explainer helped give you a clearer guide to this new world and what's at stake. Thanks so much for joining us.